Good afternoon. Dear listeners, welcome to Auga Group Investor Event. I'm Emilia from Nasdaq Vilnius, and I will be the moderator for today's event. We will start with a presentation from the management, which will be followed by the Q&A session. As always, I encourage every one of you to ask questions during and after the presentation in the question box of your screen. With that said, I'm pleased to introduce today's presenter, Chief Financial Officer Mindaugas Ambrasas. Mr. Ambrasas, please, the floor is yours and good luck.
Thank you and good afternoon to everyone. As introduced, my name is Mindaugas Ambrasas. I'm CFO of Auga Group, and today I will present results of our group for the full year of 2021. I think in general, we can say that results for 9 months, which we presented 3 months ago, they really showed quite a clear trend how the year 2021 looks for us. And today we just really can confirm that unfortunately 2021 was quite a challenging year for Auga Group for several reasons. First of all, extreme heat in summer, COVID cases, some other things, and this led to, I would say, quite poor result financially, when the group have 40 million euros loss for the full year of 2021. From perspective of the fourth quarter, I would say result is really in line with the situation of the trend which was going for the last year. But a few things I would like to elaborate a little bit, that we occurred additional losses in the fourth quarter due to some additional provisions we made at the end of the year. And I think the most important part of the provisions is 1.2 million provisions for receivables from Symbol LLC. And just to elaborate on this case, the really story goes from 2018, when Auga Group sold a company in Crimea. So we still have receivables from that transaction, and we had some problems already last year with the payment for this transaction. And from that perspective, and also keeping in mind the current situation, decision was made to make additional provisions. So generally, those additional provisions, all the provisions of almost 1.5 million euros, they of course also had negative additional impact on losses we occurred for the year, though it didn't have that or the same effect on our EBITDA result. But as always, let's go through our business segments and to discuss in more details what happened. But I think our idea and our target for today was not maybe to spend that much time on the results for the year, because really lots of reasons and consequences of those reasons already were told and discussed in quite details during presentation of 3 quarters. So today we would like to focus more on the latest developments, what happened in the segments in the last quarter, and how we see and how we plan to work in the future. So as always, let's start from our largest segment, crop growing. And as I mentioned already today, and as we already told you in the presentation of 3 quarters, our results suffered quite a lot from extreme heat we had in our region during the summer. Because of that, we have significantly lower yields, especially for summer crops and legumes. And this was, I would say, the main reason of our poor result of the segment for the year. Secondly, and this is also an important fact, that though we had a significant increase in commodity prices in the end fourth quarter of the year, we really didn't benefit that much from those changes, because we do pre-contracting of our forecasted harvest, and we start doing this in the beginning or second quarter of the year when the price level was lower. And unfortunately, we end up with a situation that due to the lower harvest, our actual harvest was significantly lower. And though in the beginning we planned to contract, let's say 30–40% of forecasted harvest, we end up with contracting 100%. So we had to follow the agreements and execute transactions on the prices which were set in the beginning of the year and didn't benefit that much from higher price level at the end of the year. So at the end of that, because of those two reasons, for the year, we have 3.2 million euros loss in revaluation of crops, and last year result was almost 8 million euros positive. So this difference of almost 11 million euros year to year really reflects almost on the same level on the last line of segment's result, gross profit. On a positive note, we already saw some positive effect of increasing prices in the fourth quarter. So I think after quite a long period of time, I think it was the first quarter when we had a positive result from our sales operations, though it was not that significant, 0.13 million euros profit from sales operations in Q4 alone. So, though this had some positive effect, but not that big that would have essential change in overall result. Another important note, we had quite significant amount of write-offs of inventories. And I think I also need to elaborate on this a little bit, because inventories, maybe they are not, let's say, business as normal, but they also result of some of the changes we are doing. So I think the main idea and what we are trying to achieve here, we really want to have very clear pricing for internal transactions and really have very clear result of our every business segment, because we still have internal transactions when one segment, for example, crop growing, is preparing forage for dairy business, and we have transactions between the segments. So the target, as I said, is to make results of the segment very transparent and clear. So historically, part of those costs were attributed to different segments. Currently, we put them into one line of inventory write-offs, but starting from next year, this will be accounted separately and will be a separate line in our financial reports. So for 2021, we have slightly, I would say not slightly, but a higher negative result from those transformations because of the way how we calculate the result of those internal transactions, but also from the business logic, because last year, due to the same heat, costs per ton of forage were higher. So this also increased overall costs per ton for forage and affected a higher negative result, which was this year shown in the inventory write-offs line. But moving further to the future, I think the most important and the factor which really gives reason for optimism for us is really latest developments in the market, and talk about the pricing level. So as always, we are showing prices of wheat, conventional and organic in Lithuania, and the price level we have in Auga group. But I think prices of wheat really represents quite well overall situation with other commodities, organic and conventional as well. So as you can see from the slide, and I think all of you follows know that really there was quite significant growth of the prices, which started in at the end of 2021, and the trend really continues in 2022, at least for organic commodities as well. So right now we really have a situation in the market that, at least in organic market, when demand is really outpacing supply, and then there is in some cases even problematic to get some of the cultures, to find some of the cultures. But there are also some specific reasons, and we believe that they will help this trend to continue, and those reasons will support high price of commodities in the future as well. So first of all, starting from 2022, there is a new regulation in the EU regarding organic feeding of organic livestock, let's say. So generally there is a requirement that all the feed for the livestock, cows and pigs, should be organic as well. So this really increase demand for organic feed. Secondly, due to increased logistic costs, some of the countries, China, for example, they really are not competitive anymore, and this also, is beneficial for EU or producers or Auga Group as well. And thirdly, due to reasons mentioned earlier, we see a very clear trend from the big EU companies that they made a decision that in the long term we really want to purchase raw materials of EU origin only. So once again, we have competitive advantages with non-EU producers, and this is also supports higher prices for organic grains in European Union. So this is more like a general overview, but if just to go to specific situation in our group, so our expectation was also that if we will start making contracts for next or this year, harvest, we really believe that the pricing level should be like 20-30% higher comparing to the prices we had last year, and we sold our harvest last year. And the biggest price growth is coming from feed grains, legumes. So generally, where like the biggest demand is at the moment. So for the end of February, we have 28% of our forecasted harvest contracted, but really big part of that is contracts, long-term contracts we have for growing specific crops. For example, sugar rapes. If we exclude those long-term agreements, so generally, I think now is the time when contracting of new harvest just started. So from that perspective, if we minus or exclude those long-term agreements, so from the remaining forecasted harvest, we contracted as for today 2.4%. But the percentage is still quite low. But as I said, this is more of like situation in the market and market's willingness to make new contracts. But even from this small number, we can see that our expectations regarding the pricing level is really on line. So generally, if we talk about those 2.4% agreements, so if we compare prices we sold our harvest last year and the contract price we have this year, so generally we see from 25 to 33% higher prices for the same commodities. So this is really gives optimism for us, and then we really can see why situation and results can change quite significantly in crop growing segment and overall for Auga Group in 2022. Second segment, dairy, and here I think we already told the story a couple of times that unfortunately we had some issues in production in the first half of the year. We solved those issues in the second half, and generally, if we look at the figures, so for the end of the year, we generally compensated what was lost in the first half. But still, if we look at the overall figures, we can say that the expectations were higher, but at the same time, we believe that now the positive trends in production first, and secondly in the pricing, and I will elaborate on this a little bit later. So generally, there is also optimism for the segment to improve result this year. Another important message from us. We already mentioned a couple of times that we are working on new technology, how to prepare feed for the cows in new way, in using technologies we are currently developing. So we already have first facility running, and we are running tests on small number of cows. So the first results from the tests are really encouraging, because we get from around 20% higher yields comparing to the same cows, but which are using, let's say, our standard feed. So if we are really successful with the testing, and we can start using this technology on at least part of our herd. So this is also another reason to be optimistic about possibilities to improve result of the segment. But if you can see, as you can see from the table, so gross profit for the year is almost 1 million euros, an increase from the last year. But as I said, this is really we believe that this segment really has potential to improve the results, and the things what we are doing with our herd, the quality of herd should start giving results hopefully in 2022. But to elaborate a little bit more on those two key areas in the segment, so generally what are our milk yields and what is our milk price. So here you can see more detailed information. So as already mentioned, first half of the year, even looking at the graph, you can see that milk yields year on year generally were on the same level. And in the second half of the year, we really picked up. For the year, we had growth of only 2%, but if we compare our results in January, year on year, so generally our result for January is yields are 7% higher than we had in 2021. So this is, I would say, very optimistic sign for us. And more importantly, milk prices, I would say, they also following general trend of commodity prices. So price for raw milk is increasing and continues to increase in 2022. Of course, there are some seasonal aspects in that, but still, if we look at change of price during 2021, so average milk price for Auga Group increased by 8%. There are two aspects in this increase. So of course, there is, let's say, normal price increase. We also slightly increased part of our organic milk in total sales, but this effect is a small one already, because for the last couple of years, our sales of organic milk exceeded 90%. So there is, I would say, full possible room for improvement is already reached there. So now we are focusing more on production and milk prices. And as mentioned, this trend of increasing prices, it really continues in January in 2022. So, and this was even more substantial increase. So in January, we received 15% higher price comparing to January 2021. So this is just a confirmation that, as I said, there are reasons to believe that results of the segment should improve. Mushroom growing. This is really very similar story to what I told about dairy. And unfortunately, in this segment, we also had some problems with production. And this led to substantially poor result for the year. We already told a couple of times, I believe, what had happened. So just a short reminder that due to hot weather and due to COVID situation, we had a problem with production. So generally, our production and sales volumes decreased almost by 15-20%. I will follow up on that a little bit later. But our cost structure in general are almost fixed. So generally, we have the same costs, but our revenues went down. So this was the main reason. And once again, going back to the situation with dairy, this problem started from June 2021. So it took some time to find a solution and to improve the situation. And the reason why it really takes that long is that production cycle in the mushrooms is almost 7 weeks. So generally, if you make a changes in compost production, till you see how those changes really work in mushroom growing, it takes some time. If you need to make another adjustments, it's another 1.5 month to see the final result. But we believe that we were on track last year, and currently we reached, let's say, normal level of production, which should help us to get back on the results we had previously in the segment. So just to elaborate on the things I mentioned, here you can really see that production and sales volumes had decreased substantially starting from July, and then we had almost 6 months constant, maybe small but constant growth. And in the fourth quarter, comparing to the third quarter, production output was already higher by 18%, and in January we reached 1,074 tons of mushroom sold. So as I said, generally we are in the level of, I'd say, historical average, the level where we want to be in order to have acceptable financial results. So really, hopefully, all those problems we had, they are solved and controlled now, so we can really focus on other things. And talking about mushrooms, we already mentioned, and we worked for a couple of years how to increase part of our organic mushroom sales. So this is also one of the key topics and targets for this year. And I would say for the mushroom growing, there is really important how we will be able to control the costs, because this is one of the segments which is really affected by increased energy prices. So we already started implementing solutions how to decrease energy consumption, and in that way control our cost level. So at the same time, a review of pricing is happening. So generally, we made some agreements already at the end of last year, and we already seeing the first results from that. And this is also the task for the first quarter, because once again, pressure from cost side is there, but we believe that with restored production volumes, we are on path to get back to normal results on the segment. FMCG is really maybe we only have one slide about the segment, so I think the situation is generally same we had for the last couple of years. So the segment has stable growth. It grew by 27% for the full year. Profitability also increased. What observation I could say, and just comparing results for the year and for the 9 months, I think we can see that there is, from our history already working with our customers, that there is quite big seasonality in this business, just because our main product is soup, and as it is a hot product, so it is mainly consumed during winter or autumn periods. So generally, our consumers are buying and preparing for the new season in the end of second quarter, third quarter, and first quarter and fourth quarter usually wear, and we expect the same this year. That will be lower periods in terms of sales, etc. From our plans for 2022, few things which happened, that though we still see some challenges in logistics, and we had some cases when logistics took really long time to reach and our products to reach our customers, but this didn't create some big problems overall. But the good thing that for after a couple of years, we already are able to participate in business fairs to meet our potential customers or existing customers live. So this was really needed to expand our customer base, to increase our cooperation. So as now we are able to do that, so based on our existing pipeline, we believe that this growth rate we had in 21 can be really continued in 22 as well. And I think it's also it's a topic which is very important to talk and discuss currently, how our group business can be impacted by all things which are happening in our neighboring countries. So from that perspective, we don't see risks related to our group business. Russia, Belarus were never important markets for us. Historically, we did only occasional sales to those markets. As you can see, we had like below 0.5% sales in 2021. So from that perspective, we didn't plan those countries as our important markets. So definitely in current situation, we don't plan to do anything in these markets. Historically, we had some business with Russia. We were selling our compost from our mushroom segment to some Russian companies, but this business was stopped in the end of 2020, and we already mentioned a couple of times that we never planned and we never expected to this business to get back to the levels we had. So generally, we didn't make any attempts to get back, and of course we are not planning in the future as well. So generally, from that perspective, effect on our results, on our activities, they will be really limited. Additionally, I can also say that we saw a substantial increase in commodity prices in the last couple of days due to the same events. And secondly, I believe there is an also official announcement that Russia's commodities will not be certified as organics by EU anymore. So generally, Russia is out of EU organic market. So these are the effects which could be positive for Auga Group business, but of course, I think all of us hope that this really tragic situation would then come up to the end in the shortest period time. And financial information. Before that, just to sum up all this presentation about the segments. So as always, here you can see what were the main drivers and which segments affected this change in our EBITDA. So as I said in the very beginning, it's obvious that crop growing with poor results due to extreme hot had the largest impact on decrease of EBITDA year on year. So if we have a decrease of almost 11 million euros, so you could say that almost all of that comes from crop growing. And the most important, I would say, discussion and maybe news for today. I think last time we mentioned already that as we saw that results of the group are quite poor, that our biggest target and the focus for the future is really still find the possibilities how we can continue our R&D projects, not only to do the R&D, but also we believe that we are already on the phase when some of the things we are developing, they are ready for commercialization. So this is really was the task for us to find the way how we can really start working with the projects, even in a situation when we have quite poor financial results. So I think now I can really say and assure that we believe that we are, now you can not say 100% sure, but 99% sure that we succeeded with this task and goal, and we are in the situation when we can continue with our plan to go further. So what we did, we really reached, and we are really, I would say, happy with our cooperation with our partners, banks. So generally, we received waivers from all the banks for breaching financial covenants as for the end of 2021. So generally, they are supporting us and helping us to continue the path what we are doing. And most important thing is that we also reached an agreement and currently are working on just legal documentation to finalize financing for our daily activities, but most importantly, those investment projects we planned for this year. So important note, of course, I need to stress that theoretically, we are still working on documentation, but all these financing were approved by our partners, and in some cases, some term sheet agreements were already signed. So generally now we are working on documentation just to proceed with the funding we agreed. And what type of investments we are planning to do and what we are planning to achieve with the funding we secured. Because as I said, the main focus is not really to invest into, I don't know, land, machinery, expand our business. We really see Auga's future as a company which develops and uses new technology and finds the way how to share this technology with others. So what we are trying, or what we are planning to do this year, so we are planning to really implement or work in three key areas in reaching those sustainability goals or strategy implementation, which was planned and announced. So first of all, the funding we secured, we will already have three biomethane production facilities running by fourth quarter in 2022, so by the end of this year. So generally, those three facilities will be able to produce biomethane, which will fully cover all needs of Auga Group. If we talk our full need in terms of our tractor, energy consumption, before we will be able, to change our fleet, so this can be sold as biomethane for other consumers as well. So this is one project area. Secondly, as I already mentioned today during the presentation, we are working on this specialized feed technology. So this first prototype is up and running, and we are doing testings now. And generally, we have two targets and what we want to achieve with this technology. So first thing is really to improve yields, how much milk we get from the cow. Second, which is also very important in terms of our future strategy, reaching this CO2 neutrality, is to decrease or reduce our CO2 emissions from cows. So we're already doing some tests regarding yields, and I already mentioned what kind of results. Tests for CO2 emissions will follow, and from those three areas, I think this one, this is the one we don't have like a full clear plan yet. So of course we need to finalize our testing, and if we are successful with that, we already have projects, locations in place, so we can start implement and build not only this one facility we are already operating, but other facilities which can be also used to produce this special feed for cows. And the third, it's Auga tractor. The first prototype we presented last year. So of course we have lots of questions and lots of interest. What we are planning to do with this. As said, it was already said during previous presentation that we really want to start production this year. So our target with the funding we have and possibilities we have is that for the start, we really want to build small number of the tractors which will be fully working and used in Auga group fields. And this will be like a test group which can later be like a proof that this technology is really working, and we can expand this business model further. And just also to remind, we already have agreement for assembling of tractors signed and in place. So generally, once again, with financing secured, we are on path to start building those tractors for first of all our own use and testing, and later on as another step how to expand this business line in the future. And thirdly, how we see Auga Group going and developing and changing in the future. From all those discussions we had for the last 3-4 months, I believe we understood that the best way for us to move forward is first of all to complete a couple of tasks. So first of all, and what we are planning to do for this year, so generally we really want to implement those investments I mentioned in the previous slide. So generally that for the end of the year we would have so-called operational proof of concept. So generally the technologies we were talking for a couple of years now, that we could really have them operational running in Auga group fields. So of course, this will be the situation that all operations of Auga Group are working on those technologies, but we will have at least part of that operational, and we can really show actual results from technologies we are having. Secondly, we believe that there is quite an interest in those new technologies, but there is also a challenge because there could be lots of interest in new technologies, but then you also have quite sizable agricultural business on the side. So this creates lots of questions, and this is really difficult to find new investors which would like to invest into new technologies, but would get this agricultural business as well. So our plan is that we would like to separate or create like subsidiary in Auga Group, which will be the center of all those new technology developments. And the plan is to do this also by the end of the year. So generally, the idea and the vision is that this year should be like a year when we need to do all the homework and to be prepared for the next step in Auga Group. We understand that, with our current situation, all the developments we did from our own funds, and of course, this is the limiting factor. So generally, if we have this proof of concept working, if we have structure in place, which is interesting for future investors, we believe that then could be a good timing to look for new equity funding for scaling of those technologies, or for scaling this business model in Auga Group, or for the third parties as well. And once again, maybe legal note that no official decisions regarding new funding is made yet. This is just a view and plan how we want to move forward with our strategy execution. And there's always the same information about our share price changes, and just maybe a couple of updates on what had happened in 2021. So we still in the process of delisting from Warsaw Stock Exchange. So generally, I would say it's more like technicality. We are waiting for the final approval from regulator from Poland, and then this transaction will be finalized. So hopefully, we will do it in I don't know, a month or something. But this is just technical process going on. And as always, you can find more information, financial reports, figures in Excel format in our web page. And thank you. I think that's it from my side. Thank you for listening. And now I'm open for the questions.
Thank you very much for your presentation. And we will proceed with the questions, but before that, I would like to remind all the attendees that you are very welcome to send in your questions in the question box of your screen. So let's start, and the first question would be as following. Due to ongoing war in East, distinct agricultural commodity prices have risen. Do you see Auga Group benefiting from that? Thank you.
Thank you for the question. I think this topic was already discussed during the presentation. So yes, there is an increase in commodity prices and other factors which I already mentioned in the presentation. But as I said, hopefully this situation will be solved, and I think that's the most important thing for all of us.
Thank you. And could you please comment on what percentage of 2021 income was from the export, please?
So as always, we are quite export-oriented company, and historically, a bigger part of our sales goes to export market. If we look at our segments, so mushrooms is the only and dairy, I would say, partly is segments which are more focused on local, I would say, regional market, meaning Baltics, Scandinavia, Poland. But if we talk about commodities, so generally it's EU mainly. If we talk FMCG, so we are selling our products all over the world, and US is still the largest market. But if just to take overall, so I would say around 75% of sales is export.
Thank you. Have you faced any limitations of dairy products exports to China?
Export of dairy products to China was really the topic we are working on this subject for quite a long time, and we also, I think, talked about this during similar presentations almost a year ago. Almost a year ago, we even had all the certificates needed to export dairy commodities to China. Even we had some discussions about starting this business, but it really never it never started. So generally, we didn't have any dairy sales to China. So that's why issues with China we have for last couple of months. They also don't have any effect on Auga Group results and our business in general. So generally, right now, we are really happy with the situation, prices we are getting for our milk in our region. So I would say there is even no need to, and there is no need to sell the milk to China in order to get organic prices or to get a higher prices. So this is really not a problem, and it doesn't create problems for us.
Thank you for your comment. Could you please clarify 0.3 million one-off costs for cash crops?
It's just provisions we did for some of the cash crops. So this is from previous harvest, quite specific culture, and we believe that there was decrease in the price, so that's why we made provisions reevaluating price of our inventories. So that's how this 0.3 million came up.
Thank you. Do you plan to contract 100% of expected wheat harvest till the end of Q3 of 2022? Thank you.
It's really a very good question, and it's really impossible to answer it because from one perspective, we believe that current pricing level is really good for us, and I would personally I would prefer to fix everything and to be sure about our result right now. But we also learned some lessons from last year, and we had similar situations some years ago. That situation, the forecasted harvest can change. So we can't take a risk making more contracts than we can deliver. So that's why we always have a plan in the beginning of the year, which cultures we want to contract in advance, which portion of the cultures we want to contract in advance. So I would say wheat they has less fluctuation in the harvest. So this is the culture we are tending to contract more comparing to others. But from our perspective, we still want to keep the room and to mitigate the risk of lower harvest. And we also believe that right now there are lots of factors saying that this price level will stay and will continue. So I think we will continue with similar strategy we had for the last couple of years. That we are contracting certain part. I would say till the end of second quarter, because if you look at the third quarter, so it's already September. So lots of contracts are already made there. So if we talk about pre-contracts here, so they are usually done by the end of the second quarter.
Thank you. Have you received any licensing offers from major tractor market players for Auga technology? Thank you.
I think that we had some interest and just requests from different players. I'm not sure there was a major tractor manufacturing, but companies from different areas were interested just to discuss our plans and what we are planning to do with this technology. But I think our vision, what we want to do, is not to have like a license and sell the technology to a producer. We see our tractor as part of our solution. So generally, we want to develop this technology by ourselves, and that's why we really want to test the tractors in real Auga farms, and then to propose not tractor only, but to propose overall solution how to produce agricultural products in completely different way. So it's not only about tractor, but about biogas, about feed plants, etc. So it's only small part of the puzzle. That's why we really don't consider this option just to sell the technology and then to buy tractors from the third party.
Thank you for your answer. Do you see profitability reduction in 2022 due to increased energy prices, for instance, fuel, electricity, or natural gas? Thank you.
Of course, increase of energy prices will have an impact on profitability overall, but we believe that at the same time, increase of prices is happening. So from our forecasts and from actual figures we already have for January, we see that this increase in costs is lower than increase on prices we see in our business. So of course, this increase will have negative effect, but it will be compensated by even higher increase in final product prices.
Thank you. As all the questions are answered on behalf of Auga Group and Nasdaq Vilnius, thank you everyone for being with us today. The recording of the presentation will be available in the Nasdaq Baltic YouTube channel. Have a good evening, everyone, and goodbye.
Thank you.